Hey everyone, in this video I'm going to answer which is the better EV stock to buy for 2024. Is it Rivian or is it Lucid? Now I know 2023 has been a difficult year for electric vehicle stocks and electric vehicle growth, and you might be surprised to hear that because overall the EV industry did grow in 2023, but the difficulty has been that supply has increased more than the growth in demand. And so that's imbalance between supply and demand has led to a price war, and that's not been good for EVs overall. So let's take a look at these two stocks in particular and see which one I think is the better one to buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first thing I'm going to compare Rivian and Lucid on is trailing 12-month revenue. And you could see Rivian's explosive revenue growth starting from July of 2022 at less than 1 billion all the way up to 3.78 billion in the most recent update. Lucid has had a more difficult time in increasing revenue, in fact experiencing a decrease in revenue to 695 million in the most recent trailing 12-month update. In 2023 production, Rivian actually increased the production target twice, up from 50,000 units initial production to 52,000 and then finally 54,000. So Rivian has increased its production target by about 8% on the year. Meanwhile, Lucid started the year with a production target of 12,000 and reduced that target to 10,000 and then finally reduced it even further to between 8,000 and 8,500. So while Rivian increased its production target by about 8%, Lucid decreased its production target by about 33%. That's because of falling demand from consumers. It wasn't that Lucid hasn't been able to produce. They've got the manufacturing capacity now, but what management said is that customer demand is not as high as they thought it would be. And so they had to reduce production to match demand. They don't want to produce these cars and just have them sitting around. So that's been the downside for Lucid and the upside for Rivian. But let's look at the next couple of years and what estimates are for their growth in 2024 and 2025. So for Lucid, analysts expect the company to recover strongly in 2024 and 2025. Analysts expect Lucid to generate 118% revenue growth in 2024 and 172% revenue growth in 2025. So the projection estimates for growth for Lucid are explosive over the next couple of years. They did recently launch a new model in September. That's likely to drive demand for 2024. And then later in 2024, they're going to launch the SUV, and that's going to drive demand for 2025. So the next couple of years looks strong for Lucid if it plays out the way analysts expect. Meanwhile, for Rivian, analysts expect the company to generate 41% revenue growth in fiscal year 2024 and then 66% revenue growth in fiscal year 2025. That would be lower than the 165% revenue growth the company generated in 2023. Rivian is not going to launch its next generation technology, probably not until 2026 at the earliest. That's when it's launching its or expanding its manufacturing with an additional manufacturing facility for its next generation products, which are expected to be at significantly lower prices, which is expected to drive strong consumer demand for Rivian's vehicles. For now, though, 41% and 66% growth over the next 2 years is solid as well. Although it's not as strong as Lucid, it's still very strong revenue growth from Rivian. And so partly to drive that kind of growth in production and growth in revenue, these companies have had to hire significant numbers of employees. Just in the last couple of years, Rivian has increased its employee count from around 4,000 in January of 2021 all the way up to 14,100 in 2022. A big boost in employee count. Lucid has been more conservative in their growth from 4,000 to 7,200 in employee count, and it's because their revenue growth in 2023 has not been as strong. given the expectations for 2024 and 2025, I wouldn't be surprised if Lucid's employee count grows significantly over the next couple of years to support that kind of revenue growth. If you're going to grow revenue by that much, you're probably going to need to increase production. And if you're going to increase production, you're probably going to need more employees. And so Lucid, I would suspect that their employee count will grow substantially higher over the next couple of years. While Rivian, I don't expect its employee count to grow much higher from here over the next couple of years, but starting in 2026, when it starts to build out that second manufacturing facility, that's when there's going to be another big step up for Rivian in terms of its employee count. The next thing I wanted to look at is the average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. That being said, you can see Lucid has diluted shareholders significantly more than Rivian. Lucid has gone from around, let's say, 1.2 billion shares outstanding all the way up to 2.3 billion shares outstanding, while Rivian has gone from about 650 to 700 million shares outstanding up to 952 million shares outstanding. This is partly due to Rivian raising a lot more money to start with and Lucid taking a more incremental approach to raising money. Rivian was fortunate enough to raise like $16 billion during the frenzy of EV stocks around 2020 and 2021, when everybody and their cousin wanted to invest in EV stocks and Rivian's valuation was sky high. It was able to raise a lot of money at that time, I think close to $16 billion. And so it capitalized on that frenzy, where Lucid also did so, but not as significantly. I'll show you just how much in a little bit. So we could see here their cash and equivalents. As of the most recent update, Rivian had $7.9 billion in cash, while Lucid had $1.16 billion. I mentioned already that Rivian was able to raise a ton of money at its peak valuation. That's when it had over $18 billion in cash, you could see here. While Lucid also raised a bunch of money, over $5 billion, it was less than 1/3 of what Rivian was able to raise during that time. So Rivian was really smart with the timing of raising its capital, really capitalizing when its valuation was at the peak, and management took advantage of that smartly, in my opinion. I also wanted to check out these two comparatively on long-term debt, and it looks like Rivian has more long-term debt at $2.7 billion compared to $2 billion for Lucid. And finally, I wanted to compare these two on valuation. Rivian is trading at about half the valuation of Lucid, according to the forward price to sales ratio. Lucid at a forward price to sales of 7 compared to Rivian at a forward price to sales of 3.5. Now, this decision is not as easy as you might think, because Lucid is expected to grow at twice the rate of Rivian over the next couple of years. And so this forward price to sales ratio, if we go forward a couple of years, might look respectably even at that rate. However, I like the fact that Rivian has made better progress in ramping up production. It has demonstrated better customer demand, and it has scaled quicker than Lucid has been able to. And so for those reasons, I would prefer Rivian over Lucid stock if I was picking one of these two EV stocks to buy for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.